Okay, we're over at stockcharts.com. Let's do a couple large cap stocks just to do some technical analysis. Let's do some technical analysis on GoPro, GPRO, just as an example. So I like stockcharts.com. This is a pretty easy example to do some technical analysis on. What we'll do, we'll look at 1 year. So you just dial it in at the bottom there, dial in 1 year, you click on update. So here we go. This is going to be pretty easy. So if we want to mark up our chart, we just click on the annotate function. It will load up here. We just want to use our line function. And what we want to do is we want to create trend lines, lower trend lines. So we can see there's a low here, there's a low here, there's a low here, there's a low here, there's a low here. We want to just basically indicate where the lows are. And we want to do the same thing again. We want to do, there's lows here, low here, low here, low here, and this kind of turns into something else here. So we'll just stop this here. Again, we're seeing it kind of being a downtrend here, and then being back in an uptrend, and then we're back in a downtrend. See, we're getting the low here, we're getting low here, lower lows, lower lows, lower lows, lower lows, all the way to the bottom here. For this one, yeah, we'll just do an adjustment here. Yeah, we'll take this one. We'll take this one right off, actually. What we'll do is, again, it's a little bit of a art, not a science. There we go. And now let's do our upper trend lines. Well, this one's a high, this one's a high, this one's a high. There we go. Let's do another one here. The high there, the high there, the high there. Park it there. Again, what we kind of see, we can kind of get a feel for what's going on here. Again, you can kind of do some short term versus long term, and we get a big downtrend. And so those are the trend lines, and now I want to look to see if there's any kind of horizontal support or resistance. And there's really not too much, so what we can do, we can just hit upload and click upload. And so what we've determined, what the point of the technical analysis is when you're investing, you can see where the low points are. So let's say we didn't really know what was going to happen. We can assume there could be some buying pressure when the stock hits this lower trend line. We can assume moving forward that there's going to be some selling pressure on this upper trend line. But here we can see the direction. We can see now this lower trend line. We're getting higher highs, higher lows. If we were to assume, let's say we didn't know what happened. Let's say we're back in April here. This is April. We don't know what's going on. Well, the strategy here is to follow the trend line. So we want to buy on the lower trend line. We want to sell on the upper trend line. So the idea here, let's go back to the beginning. Buy here, sell here. Buy here, sell here. Buy here, sell here. Buy down here, sell here. Buy, sell, buy, sell, buy, sell. And then we're in a downtrend. So again, it's tough to buy, but sell, buy, sell, short, maybe cover. Maybe, we're in a huge downturn. I mean, GoPro, man, it's lost so much of its value. Man, the stock has really declined, and that's what makes this technical analysis easy. So maybe we buy here, and again, I use technical analysis a little bit. It's not the end all be all, because sometimes the trend lines help, sometimes they don't help. But sometimes there's moving averages. So let's see if moving averages would help us. So let's just do overlays. Let's just do a simple moving average, just to give you an idea what a simple moving average will look like. So we'll do simple moving average. We'll do a 20. We'll do a 50, and we'll do a 200, because that's normally what you see. And you may be wondering, what's the difference between a simple moving average and an exponential moving average? Now, the simple moving average is a kind of a a calculation that's based evenly. So if it's a 200-day moving average, then the calculation's divided by 200. The exponential moving average, it's a more complex calculation, but what it does, it gives a more of an emphasis on the curve based on the price activity that's closer. So let me rephrase that. The newer price levels in an exponential moving averages have a higher weight, so it will pull towards the most recent price harder. Again, you'll just have to, a little piece of homework for you. Compare a simple moving average with an exponential moving average. Do a 20-day simple moving average, a 20-day exponential moving average. You'll see exactly what I mean. The exponential average will curve tighter to the price. So we have a little bit of a mess here. So what we'll do is we'll actually get rid of my nice lower trend lines, upper trend lines. Again, you call these channels. This is a lower channel, an upper channel, lower channel, upper channel. This you could call, since it's not perfectly 90 degrees to each other, it's almost compressing in a bit, you could call it like a wedge pattern. Some people call things flag patterns. Again, there's a lot of different interpretation of technical analysis, and that's why I say it's a little bit more of an art than a science. But let's see if we can actually just reset the image here, just so we can focus on the trend lines. Yeah, delete all. There we go, and we'll click upload. Okay, so now let's focus on the moving averages. So let's look at our chart here. Oh, this is an EMA. We want this to be a simple moving average, and we'll do 200. So the 200 moving day average is the green here, and so we can see the 200-day moving average. It creates resistance here, and then we can see it breaks above the 200-day moving average here, but then it breaks down below. So when it breaks down below the 200-day moving average, the 200-day moving average, more so than the other two moving averages, is considered to be support. Again, it's resistance up here, it's support down here. People like to buy on the 200-day moving average line. And when it breaks below, it really goes down. So the moving averages, you can do different strategies, but I wouldn't recommend to do any strategies with the moving averages because they're just too slow. They'll give too many false breakouts, too many signals. Some will be good, some will be bad. You might be tempted as a new investor, I'll do a strategy here where this 20 crosses the 50, then I'll buy in, and then I'll sell short when the 20 crosses below the 50 again here. But honestly, there's better strategies out there. I'll give you some good strategies to work with. What I want to conclude with is indicators. And just like moving averages, they're too slow, they're too sloppy, they don't give clear buy signals, they don't give clear sell signals. I want to go over some indicators as well, because I'm not a big fan of the indicators. I'm a big fan of the price action. So what I mean by that is I'd rather reference maybe the August 1st price at $61 and see if it's upper or lower than $61. Is it above 61? Is it below 61? So I know when it breaks below 61, then it's a sell. I don't want to be relying on an indicator. Let's try an indicator out. We'll do 3 indicators. We'll do the MACD. Let's try the MACD. We'll just put it above. All right, so the MACD is basically saying sell here, and then it's actually giving, this is a great example because the MACD is giving a buy signal when this black line is above the red line, and the MACD is saying to buy here, and the price keeps going down, the price keeps going down, the price keeps going down, the price gaps down. So the MACD really is not helping us. Again, the MACD kind of works here, but this right here, see how the price goes lower, but the MACD says to buy. Again, when the little bars here are above, that means it's a buy signal for the MACD. Here it kind of works, here it kind of works. Here it looks like you should sell even though it moves higher. And then here, it's a bit of a mess. So the MACD didn't really help us out. Let's give another example. Again, the MACD is based off of moving averages, and we saw how moving averages don't work. let's do a full stochastics, as it's called. So the stochastics, they kind of work, they kind of don't work. So here it kind of worked. See, the black line again above the red line. When the stochastics is down here, it's said to be oversold. Too many people have sold the stock. It could be at a support level. Again, we can always measure it horizontally here to see if there's any support there. What I'm looking for and what technical analysis looks for when you hold a horizontal support line, you want to see if the price has rested on that line before, or maybe that line has acted as resistance before. So this line, it kind of is here, it kind of is here, it kind of is here, it kind of is over here. So it's a bit of a sloppy support or resistance line. And talking about the stochastics, again, don't waste your time too much on these indicators, because down here, what are you supposed to make of this? We're in oversold territory. We're seeing so much chop here. We're seeing a little bit of a buy here. Again, you wouldn't really be able to escape that gap down per se. And we see a little bit of a buy here. Again, it's half of the job is supposed to be marking when to buy, when to sell. The other half of the job, this indicator is supposed to be doing, is marking oversold territory when it's low, and then overbought territory up here. But there's better ways to go about it than indicators, and indicators should not be relied on. Maybe you want to use them as a second opinion, but if I were to basically tell myself 5 years ago what you want to look for, you want to look for the price action. You'd rather want to focus on specific price levels. $50 acts as a good resistance here, support here, and then 65 acts as resistance. So you use the price versus the indicators. I don't like indicators. You shouldn't rely on indicators. I'm trying to disprove indicators here. And let's do one more example. Let's do commodity channel index or something like that. There's so many indicators out there again. And again, it kind of works. Maybe you buy down here, you sell up here, but that doesn't work anymore when you're supposed to be buying down here, and it slides lower, slides lower, slides lower. Maybe you're a big fan of RSI. Let's see if I can find RSI here. RSI is a popular indicator, relative strength index. And again, I used to really like it, except, you get these oversold areas and it just keeps going lower and lower and lower and lower and lower. And the price keeps going lower, but notice how the RSI starts going up. So it's really not helping you here. And again, you sell here, but then again, the stock goes higher. So that this RSI kind of doesn't help you out. And we're looking at 1 year on a daily. Again, indicators work well on the long term. And 1 year is more than enough time for these indicators to work, and they don't really work. So you should focus on the price action. We'll talk more about the strategy, but just take a look at the price. What is it doing at $50 and $60, $70? And we can see the price is going lower. So what happened around $40? Well, the stock blew right down below $40. And what happened at $30? Well, the stock kind of held $30, but then it broke below $30. So we can see the price action gives a more clear picture of what's going on. We can look at other stocks here. Like let's look at like a Tesla here, and let's see if we can find any support and resistance levels. So an example here, this price here, $230, it acts as a horizontal support line. So it's having trouble breaking higher than $230. Again, it's having trouble breaking higher than $230. Down here's the support. It's finding buyers at 185. It's finding buyers a little bit higher. It's finding buyers right here, 185. And when a stock breaks above resistance, it becomes support. So here it breaks above 230 and it has a nice uptrend and it becomes support. Again, here it breaks down, but it breaks above. We see a move here. And here is another kind of range the stock gets in. So down here, we're seeing buyers. We're seeing a low, we're seeing a low, we're seeing a low. So that we would say support is around 205, maybe 200, even that zone there. Again, it's more of an art than a science, the support and resistance stuff. and we're seeing resistance at maybe like 240. Again, the stock's having trouble. So the basic strategy is you buy in the support where there's buyers, you sell where the stock's having trouble, where there's resistance. Or if you're shorting, you short in the resistance, you cover at the support. And that's the basic strategy there. So you don't really need to worry about the patterns. Again, some people call this we can see like a down channel would form, and there's all kinds of wedges and flags and double tops and double bottoms. You just want to know that someone's talking about support, they're talking about resistance, they're talking about a channel upward. Again, a channel upward. Is the stock breaking out? Is it breaking into new highs? Is it breaking out of resistance? Again, when it breaks out of resistance, it becomes support. If it breaks below support, again, it kind of broke below support here. See, it was support here, it was support here, it was support here. It broke below support, and now that becomes resistance. It becomes resistance here, it becomes resistance here. Again, since so many investors do technical analysis and they follow the support and resistance levels, it becomes the reality. So what people believe becomes the truth. And what I want to show you before this module ends is finviz.com, because finviz.com, it can do the technical analysis for you if you don't want to. See here, the Tesla chart is a little bit smaller. We don't get the luxury of the big stock chart, but what we get is our moving averages, and we get this lower trend line here, and we get our upper trend line here. So again, they didn't find the exact same support and resistance levels as I did. Well, they kind of did, right? At this 205 level, see, we have resistance, we have resistance, we have resistance, we have support, we have support, we have support, we have support. We have this kind of upper trend line here that's going downward. We have this lower trend line that's going downward. And what you got to keep in mind is when these trend lines meet and the stock breaks above a trend line, that can be a big move upwards. And let's go back to our GoPro example. So once again, we're at finviz.com. There we go. So this is the one I pointed out here. It's just on a downtrend. See, we're fine. The strategy here is you buy on the support, the lower trend line, and it can be a good time to buy. It's a support level that's moving downward as the stock moves down. But again, stick to the price action. Sometimes you want to keep the technical stuff with a grain of salt. But it's important to understand support and resistance levels, because they're talked about a lot in the media, or if you're just researching stocks and you want to find a good opportunity to buy, buying at support is always a good idea, and it is a viable strategy. And let's just do one more. Let's do Visa, the credit card company here. Just, you can do any stock. You can go to finviz.com. Again, if you really want to learn the stock market, spend half an hour a day on finviz.com. You'll learn a lot. And it does the technical analysis for you with this advanced function. If you click on candle function, you get nothing. You click on the line, you get nothing. But you're on the advanced function. We see this line here right at $65. Again, round numbers can be support. Round numbers can be resistance. We see $65 is a good place to buy Visa. And we can see an upper trend line, and we can see a channel. See, it bounces between this channel. It's a buy there, it's a sell there kind of thing. And the Finviz does the trend lines for you. But a lot of people like to do their own trend lines for you. Or you can go on stocktwits.com, and maybe someone has already marked up a chart of the approximate channels and support lines and support and resistance levels. But I would say do what works for you, but you know now what technical analysis is, and really stay away from the indicators. Again, the indicators, they don't predict the future. They're designed to show overbought and oversold conditions, which you can kind of figure out on your own. Like way down here, obviously that's oversold. Way up here, that's probably overbought. Again, you see a gap up and then the price goes down. That's probably oversold territory. Now, you really don't need indicators. You can use indicators as second opinions, but don't rely on indicators. So